Has nothing to do with anything. I've never
So,
known when an FOMC meeting is in 40 years.
and just to prove the point, Jack, if a company reports good earnings, they beat on revenue, what's the stock reaction?
It depends.
Yeah, it depends. Like it's earnings don't matter.
Earnings don't matter. Guidance matters. And you never know what people are going to read into it. I've seen companies blow out earnings and the stock tanked because somebody said something in guidance.
Well,
So,
guidance might matter, but guidance also might not matter.
yeah,
It's one of those crazy things that it's kind of I don't know. We humans like to put reasons to things, and the market doesn't move according to reasons.
no.
And that realization when I came to that final realization and decoupled it for myself, that's when it unlocked my ability to make price predictions. Like you said, I've been able to do this unlike anybody else you've met. I scare myself doing it, honestly. Um, like I'll sit there and go, "Holy crap, I got that right."
You do it all
On
the
things all the time. Like I do it all the time, and like I sit there and go, "I don't know how I got that right." Um, but it's just ignoring the news because the new like there's no reasons that price moves. It just does. And even like Robinhood, you didn't think it would pull back because the company's so strong and this, that. I mean, like all the fundamental reasons, it just didn't seem like it would pull back. And then it did.
I was
And
about to say you don't pay any attention to fundamentals or news. Just everything is in the chart. You can see it. And you got an amazing ability to predict it far down the road. That's really what kills me.
yeah, yeah, time is the hardest part. Everybody wants to know, well, when is this exactly going to happen? And I don't know. I know the levels that it's going to go visit, but it's like PayPal. Let me get through the disclaimer real quick. We'll look at PayPal real quick. I want to show you something. So all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Let's take a look at this chart right here on PayPal. Now, what's crazy?
Like
All the way up here, when we were up, this looks like a bubble chart too, by the way. And all the way up in here, back in 2021, I predicted that this stock was going to come down and hit 42
based on
based on this price action right here. Not on anything in the company, anything like that. All the way back in 2021, I made this prediction.
nice.
And for years, I stuck to it. I'd update it. I'd say, and now here it is. Like I didn't know it was going to take almost 5 years to get there.
You nailed Bitcoin too way ahead of time.
Right there. But look at that chart. That is the bubble pattern right there. Human psychology in action. Like if you can internalize the fact that this is how pretty much every stock chart moves at one point or another, especially if you see them doing that vertical crap where they're going up where it doesn't even make sense, and people are like, "Hey, go buy Nvidia. We're all gonna be rich." I gotta tell everybody. I gotta tell all my friends. Um, right now, you hear people talk about got to get a piece of oil. It's going higher. It's going 150.
I wouldn't do that.
That's a dangerous game right here. You
Yeah,
get complacency on the pullback. Just it's you hear people say this too. Oh, we just need a little cool off period, and then we're gonna rally on higher.
silver, they said that.
Yeah,
Mm-hmm. I
yeah.
remember that.
Look where look what gold and silver is doing today. But this is the psychology of a market right here. When we drive prices crazy higher, there's a lot of stuff in AI right now. People are thrilled. I gotta tell everybody, oh man, you just gotta get in on Corning. You gotta get in on SanDisk. You gotta get in on MU. They're buying so much memory. We're all gonna be geniuses. We're all gonna be
See,
rich.
just to the right of that A, that thing is screaming short to me. Right, right.
Right there.
I've done it live here. Silver, spaghetti. What else? Yeah, all kind of stuff. Yeah, that's my pattern right there. That's my I love it. Stocks fall so much faster than they go up. And this shows you right there. And there's right by the denial, that drop there is brutal.
Oh,
And
look at that. Yeah.
the euphoria, that drop is brutal. And takes a long time to get up and
And the
hour.
initial pullback is pretty brutal. Then we tend to chop around. You got dip buyers come in.
Yeah. I'm out of the game though, right? If I short something up there by the A and I cover my short, I'm done with it. I
Yeah.
don't go back to the well on shorts.
Yeah, this is not one of those games you go back and over. That it's you might as well move on to the next thing you can find.
And another
There's almost always a bubble in something in the market. Crazy
America,
enough.
America's best talent is making bubbles.
People talk about there's no bubbles in the market. There's no like bullshit. We do these all the time.
Oil bubble coming up, but no AI bubble.
Oil, I'm not sure we're done going higher. The oil pattern, this is what's crazy. If you look at the crazy big dip we did in 2020 to that first peak coming back out of it, and then the retrace right here, it supports this kind of like this would blow people away.
224? Yeah, that'd
Yeah,
blow more than people away. That'd blow a lot of other stuff away.
yeah. But look at that. Look at that. I mean, this pattern is present in the market right now.
You
That
think we'll ever hit 224?
we could do that.
Now, this is, I got to ask you though, do you ever pay attention to, there is no shortage of oil right now.
No?
So could it double with there being no shortage?
That's the thing. Like this could do it could spike up there. Now, there is a tell. There's a timeline to this. This thing gets voided if we have a 2-week clock here. If we don't close above 101, basically, at the end of the month, then this thing can go down. It can be a rejection of this pattern right
Yeah, we've
here.
got a couple weeks left, and if we do break that level above, what happens?
So the 31st, if we do break above it, it activates this. Now, the conservative target on here is just that 140, 150. But the crazy target is up there at 220. And that would wreck people. That would wreck a lot of things, like you say.
Yeah.
What would that do to like gas prices?
So funny you should ask that. I have that chart drawn too. We're talking $10 a gallon.
Hey man, now hold on a minute. $10 a gallon. I think I'll pick up a bike. I'm gonna start
What
pedaling.
about you if you
Heating oil, like
Right.
diesel fuel, $12 a gallon.
yeah.
That would wreck people. I mean, that would wreck our economy. This is what could trigger the Greater Depression I've been talking about for a couple of years. Yeah, this kind of thing right here. I saw this in the charts yesterday. I was like, holy beep, holy sugar honey iced tea. It shows up in heating oil. It shows up in gasoline. It shows up in oil. Do I think it's going to happen? I give it a low probability right now, but it's in the chart. It's one of those things that showed up like this. It harkens back and reminds me of COVID. When I saw it in the chart, I was like, holy beep. What if this plays out? And then it did. And so if this sort of thing plays out, potentially you can make a lot of money on this. Potentially. Right now, look at this. Gold priced in oil. How much? An ounce of gold priced in barrels of oil. The historical ratio of gold to oil is 20 barrels of oil buys you an ounce of gold. We just came off of one of the biggest spikes. We had COVID spike that was absolute crazy bananas because oil went negative. But we're coming off of one of the biggest spikes right here that we've ever had. where it took almost 90 barrels of oil to buy an ounce of gold. The historical average for this is 20. We're still ridiculously high at 50. If gold doesn't drop, see, we price these things both in dollars. Like worldwide, we price these in dollars. But if you take dollars out of the equation, which is what this does, by dividing gold by oil, the price is gold in barrels of oil. This means that the price of oil is set to go higher and the price of gold is set to go lower. Or if the price of gold hangs still, this goes up even more. This ratio is going to come back to the historical average. And right down there around 20. And it's not perfect and it doesn't hold still, but this down here right around 20. It's kind of the historical average. Gold priced in oil. Gold priced in black gold. So, but gold's already in short supply. For what use? What is this? What is the use of gold? What do we use it for?
Nothing.
I mean, nothing. We don't use gold for anything. So it's not really in short supply.
How much is left in the ground? You got any idea, Professor?
So there's debate to that. It's kind of funny. Every year, we report these proven reserves worldwide, so many millions of tons or whatever. And every year that number keeps growing, even though we produce so many thousands of tons of gold every year and put it on the market. So it's kind of like one of these things, like the goal always extends further out. And we don't really use gold for anything. Gold's used for central bank stability. How? Why does it have value? Why does dollars have value? Why does Bitcoin have value? Gold has value the same reason Bitcoin has value.
Perceived.
Gold has value the same reason the US dollar has value. So, could you clarify, are you saying financial rising in very near future or continuing low? What does that mean? Financial rising? I don't understand your question.
Maybe
Please.
financial stocks rising. We were talking about Bank of America and JPM. Maybe she's referring to.
Yeah, please restate. I did not even talk to Kraken today because I've been on one show to the next show to the next show, and I do not have the report today.
All right. Well, I got a couple we can look at.
But I thought this was interesting, everybody. If you found value in this, if you want to do it yourself, all you do is pop up TradingView. The future, these are futures tickers right here. Futures for gold is GC1 exclamation point. That's the constant futures ticker, constant contract. CL1 exclamation point is the constant contract for oil. And you just divide by them. You can do math in the ticker. So when you type it in GC1 exclamation point, and it lets you do math in here.
I'm getting a slight headache.
But you can make your own index. Like, what's funny is, like, if you wanted to do Apple plus Amazon plus Meta plus Google, GOGL plus Tesla, 1, 2, 3, 4, 5 plus NVIDIA. Who did I leave out? Microsoft. If you want to do the Mag 7s on your own little thing, see what the value is. There you go. There's your own index for the Mag 7s. Your own Mag 7 index right there.
That name has to be changed. There's nothing magnificent about Apple or Amazon. It's not. I mean, why do they call it that? Maybe the big cap 7, but they're not magnificent.
The fact that their market cap is over $1 trillion is magnificent.
That's the mag part.
Yeah, magnificently high priced.
Yeah, I mean there's nothing magnificent about Apple and Amazon.
So just using my same chart pattern, this indicates we might take a spill right down in this area right here. might have some more downside to go across these tickers. Crazy, right? This is nothing in the market, but it's indicating that we might have more downside to go before we can be done.
Clearly below support.
Yeah.
And
Well,
what
at
was
least on the daily,
that's
clearly
when
below
you have a
daily.
good indicator. When your indicator is showing support in an uptrend and it's also become a line of resistance in a downtrend, like you just had on the previous screen, that's kind of how you know you got it right. When it
And this
flips.
right here, this was a crazy jag right here. Is that going up a time frame to 3-day? That might be where we're going to go touch, where my support resistant line comes up. We might be breaking daily support, but we may hold this 3-day support that comes in right at the target area for this pullback. This is what blows my mind, is how fractal in nature these things are, and how when one time frame turns bearish, you just move up to the next time frame and check it. And this probably works on your indicator too. For, let's go AVGO, flip on this baby. So look, the 3-day, the higher time frame, we're still churning in your.
But look at how the trend lines serve as support and resistance, right? It's kind of
Yeah,
rests in there and then finds the ceiling.
we may be dipping on down on the 3-day here. And when we go visit your 1-day, go back up to the 1-day chart. You see, we keep hitting that deep trend line, that deep trend point.
Long term. Wow, that thing is dead on. And finding resistance at the intermediate becomes the ceiling. I mean the short term becomes the ceiling.
Yeah, every time we poke up there, it,
Yeah,
it bleeds
dead
right
on.
back off.
But the thing that gets my attention always is a crossover, right? Whenever you see that, folks, that's that's as good as it gets. There's no guarantees, but that's one of the highest probability things I've ever seen in 40 years.
And you turned a bit bearish on AVGO, at least short term,
Yes, I
even
have.
though even though you're longer term bullish.
Yeah, I'm short the 330 call and long the 332.50 call. Got a really fat credit spread in there, way above the price of the stock. It'd have to go.
Look at
And
this nutty thing. If we came back to test that breakout, look exactly where all that comes together right there.
would you make a move at that price?
I don't know. It's kind of high price for me right now, my account size, but
I've done better with the higher price stuff.
it kind of tends to be a little like they tend to pay a little better on these higher price stuff. And
All
I
outs are
just, but right now, that's 32. If I did a 320 or even did a 280, call or put in here, right? If I sold a 280, that's 28,000. That's actually bigger. That would be bigger than any one allocation. So I'd be outsized on that allocation for my account size right now with $28,000 just in one contract. Times one put. That messes up my risk reward.
Mm-hmm.
So I got to keep my risk in check. I did a presentation on opening playbook here a minute ago. And look, I just want to go through something in here. Let me find it.
That's awful
Yeah.
pretty. I'll tell you that much.
Look at this right here. So if you have 1% risk per trade, you risk 1% of your account per trade. To lose 50% of your account, take 69 trades. If you risk 2% per trade, it takes 35 trades to lose 50% of your account. 35 losses. If you risk 5% per trade, only 14 losses. If you risk 10% per trade, 7 losses can eat 50% of your account. And common, 10 trade losing streaks in trading are very common. no matter the trading system. 10 trade losing streaks are a very common thing. So if you're risking 10% of your account on a trade, you take 7 losses in a row, that can be 50% of your account gone. And then it takes 100% gain to make that back.
Those are rare. 100% gains are rare. 10% losses are not rare.
But that's risking 10% of your account in a trade per trade. And that's why Jack and I talk about risking 1% per trade right there. Now, when you're doing the wheel, your risk of losing everything in the trade is low, but that's also why I'm looking at 7 positions in my account. So I'm below this 10. I'm trying to get less than 10% of my account at risk per trade. It's all an interesting game.
It is math.
Math. And I know math's not your fun. That's not fun times for you, but I thought it was something interesting I put together last night for opening playbook. And
No, I get a lot out of it. The stats, I love statistics, but just doing all the math is not my thing anymore.
yeah, there was a whole lot more to that presentation. So if you want to see more about it, that Blake could probably find the replay for that opening playbook. It'll probably be on their replay page later.
Yeah, it will be. I can send it to everyone here real quick.
Yeah, so I mean, it was like a 45-minute presentation on that. So it's quite in depth on how to use market math, how to use statistics to trade with. And so anyway, so this AVGO right now, what would I expect? High probability, more sideways. What did NVIDIA do for months here? Sideways. But interestingly enough, we haven't turned this higher time frame trend point negative.
Nope. And
Look
that
what we
crossed up to the upside,
We did back here, and we quickly came down to touch your long-term trend point. And then we reversed it, and we've just been stuck sideways.
for months. But I got to tell you, I'll pull it up maybe tomorrow. It's been one of the biggest earners in my book of stocks.
But your daily trend point is just flat. And we're holding this daily long-term trend point pretty well. But if this breaks, we could see a bigger, swifter move down.
You can sell puts and calls on this thing in a pattern like that and never get assigned.
Oh,
It's
yeah.
buyer worthless, which I love it. I love that sideways action on a volatile stock. It's no problems, no getting assigned and having to work it out. It's just pure sweetness.
And look at this one. We're testing below.
Well, once it goes below, there's no more support in my book.
And it very quickly could drop right down there.
Mm-hmm. Be shocking.
That's the warning sign right there. I have support at 370 based on some of this high back here and a fib line from the low to the high up here. But if we get below 370, this would be pretty rough for a lot of people long Tesla, including me on the TSLL. But so that is in the chart, like as a warning sign right there. It's just popping up to a 3-day chart right here. Daily chart, we're still holding on with dear life. We need to break above all this crap right here, Jack. Get some upside.
Yeah, I got 2,000 T-sizzle, TSLL.
Yeah. I'm still sitting about 4,000 myself. But it's been sitting here.
Still allowing me to sell puts and not getting called out of anything on the
Yeah, I haven't gotten called out. I haven't gotten put any more. And it's just rocking along. Yeah. For somebody yesterday, I did draw some downside and upside. Right now, based on Tesla's chart, if we popped up to like 500, 550, it's about a 25% upside priced in right now. And that would be a 50% upside here. So it would take us back to this 2150 area. And if we pull on down to that 370, it'd be about a 7% downside. Should be 14% here. So that could lead to a pull down to about 12. There's your upside downside. So if we pop to 500 on Tesla, puts you back at 2150. If we break down to 370, puts you down here. Now, if we broke on down further, maybe back to 10, right there. Anyway, still generates tons of premium though. Absolute
Beta right there.
absolute banana. You know, almost a 3 beta here. Like that's a thing. I just haven't seen anything else that pays like TSLL. Even for a $14 stock.
Let's leave your roadmap up there. I got 4 to look at here.
Yeah.
I'm in GLW.
Corningware. And see, it's got that pattern, Jack. Be careful here. That could come back.
Yeah. And in that one, and I'm on the fence on ANET.
Yeah, that one's just grinding.
That one is just grinding. But that beta, what's the beta here? I like this sideways action.
Almost 3 on that one.
Work.
Great.
Well, that's the
Yeah.
EPS. You got to go down a little more to find the beta.
Hold on. Oh, that was that's 2. I was gonna pull it up on bar chart real quick. Give me a second. Because it wants me to log in and I don't have a login. There we go.
One
60
force.
month band. 146 on this chart. And popping back over 2 on this chart. It's interesting they calculate it different. Just shows you different people have different ways to do it. Of course, I don't know what this says 1 year beta, and this one says 5-year beta. Maybe somebody at TradingView listened to us because this 1 year thing didn't used to be there. This 1Y.
1 year is better than 5 year. 5 is too much, right?
Yeah. So that's interesting. I wonder if somebody that works for TradingView was listening to us complain about this. Like, what is that beta? Now it actually says 1 year beta.
I like that. So I like this one. What do you see in the future here, Professor?
So let's turn off. Let's make this a little less noisy before I draw some stuff on here. So we've got that roadmap line. This is my indicator. Here's the high. Here's the low. We did activate this profit target up here. 75% likely.
By closing above the 140 price?
By closing above that, whatever that fib line is right there, 145. Let me zoom it up. 145.65. See, we had the high right here. We pop that on the actual high, pop that on the actual low. So it's actually 146.23. When we got that close above it, which was right there in January, 75% likely we were coming up here to the 172. But the average time to do that would be 45 days, 45 candles, 45 trading days. And we're almost to the end of that average. That average comes out April 1st. Most of the time, we're going to, if this is actually going to work, we come out right there. Now, 1 to standard deviation is 35. So that pushes it out to 80 bars with 1 standard deviation. And most, 68% of the time we should be there. If we're going to play out, we should either be at the stop or be at the target by this time frame right here. So that's a bit longer. We could go sideways and churn in here. And then we want to see that. Otherwise, we might be heading down for a lower low. And we did tag that 618 zone. And this does, with the price screwing around down here, if we don't get above that by April 1st, we might be setting up for that drop down in here. How big would the drop be? Is a question that a lot of people would have in their mind. And you would have to be able to survive a drop into this 90 to 100 area right in here. If this fails out. Lower low is the only requirement, so below 115, this would be the ideal target, 90 to 100. And it would probably play out by June. And the 90, adding 35 more bars to this would get you to the 2 standard deviation, which would be somewhere around the end of August. And then 3 standard deviations is actually 150 bars, which 99.7% of the time, this should either hit the top or the bottom before then. And if it goes longer than that, it's more likely to fail than it is to succeed. Usually these go ahead and hit by the average, which would be April 1st. So if it doesn't hit by April 1st, kind of ups the odds we're going to take a trip down here.
Yep. Still going to do it.
Yeah, I'm not saying it's bad. I'm just, the 1-year beta is over 2 on this. So
no matter what happens, I can handle it. There's, the stock may go down, but there's always going to be calls to sell if I get it put to me, right?
yeah,
There's no, the market's still going to be there. The options market's not going to go away.
So knowing this though, do you go 10% of your account right here, or do you add a little bit here? Leave some room to sell some more puts, leave some more room to sell some puts.
I don't do that. I'd put 5 or 10 puts out here at the one, whatever the PXO says.
Yeah, let me load that up and see.
10, love to get 1,000 of this. With that beta, this would be a moneymaker.
Yeah. Let's see if I can get the wheel to load here.
I'm liking it. The more I'm looking at it.
This is sideways, kind of like Nvidia is right here. As long as you don't go leverage, like this thing's probably going to print money.
And I'm not going to go too big, but I live for this. This is right in my wheelhouse. This is where the money resides. And if it goes down, I got a 2.0 beta stock that's going to give me plenty of good calls to sell until it gets right. And I don't think the company's going out of business. It may go down. It goes down at the end of the world. I'll cash flow it no matter what.
Yeah, there's your.
I like this.
There's basically your 6 months. 6 months of sideways.
I beta with no real beta price movement. I love it.
Let's grab this. God, you be down at 128.
I'm doing 128 on ANET. How much am I going to get?
Yeah, 128 is paying about $1.50.
Ooh.
Let's see. ANET. Pop this up. I was actually looking out to the 27th since that's 9 days out now. And
it's okay.
Right there. Yeah, $1.60 right there is what the mid is.
I know those are $1,610. I know. One a day.
That's beautiful, man. That's good money right there.
Sure. That's why I like it. It's going sideways. If it dips, I'll take it. I think it's going to go higher. Then I got 2 more. How you guys like this ANET one pick? Anybody like this one? Let me know in the chat.
Yeah, and that's right in line with the expected move here too.
Sure. I'm liking it.
You might actually get to own those shares.
I don't sell calls below cost basis, Mike, now let's say that I get this one put to me at 128. Susan's placing her order. Now you guys are front running me.
They're going to drive the price down. They're
Mike
going to
and
take all.
Susan, they're already in front running me. Okay.
They're going to take all the good premium.
Now here's a real sticky issue. Mike in St. Louis asks, what, let's say I sell the 128 put, I get it put to me. It goes all the way down to 120, right? Now, do I still sell 129 puts?
All right.
If it's at
So
120?
so imagine this is 120 right here.
I'll tell you what I do. And you guys can do it how you want to do it, but
I'll just show you a trick I use right here. All I do is just imagine this is 120. My cost basis is 128. So that's 121, 122, 23, 24, 25, 26, 27, 28. You can still get dollar. Look at that premium right there. It's still available. $1.50 for 9 days out if you were $8 in the money. There's $9 in the money, $10, $11, $12 in the money. You can still get reasonable money all the way up to $12 in the money. So even if it dropped down to, you're like, well, what if it dropped to, what if we went down to 100? Could you still get any kind of premium? Right? If this was 100, you're at 128 with your cost basis. So you're $28 in the money. So you need to go up 28 strikes right here. There's 10 strikes, 20 strikes, 122, there's 30 strikes basically. So right in here, there's not a lot of premium at 9 days out. We'll be looking at a 165. This is just a poor man's way to do it, Jack. We have software like PXO that helps us, but you could start going a little bit further out, 2 weeks out. There's some people playing in here.
you got a couple choices. If you get it at 128 put to you and it goes all the way down to 120, you can do basically two things. You can still sell 129 strike price calls, even though the stock's at 120, but you're going to have to go way further out in time.
Yeah, like 1 month out. Look at that. There's decent premium here now.
Premium. Or if you get the stock put to you at 128 and it goes down to 120, you can still sell a call with a strike price below 128. But if the stock gets close to that strike, you don't want to get called out at that because that's below your cost basis. You're going to have to buy that call back, take a loss on that, and then resell it out at a higher strike further out in time. But there's a chance, let's say you get it put to you at 128. It goes all the way down to 120. You sell a 124 call. If you get called out at 124 and you had it put to you at 128, you're still taking a loss. But if you sell that 124 call and it expires worthless, you're bringing your cost basis down. You're not getting called out, even though it's below your cost. So it's okay to sell a call with a strike below your cost, but you have to be aware that you may have to buy it back at a loss.
And that's kind of a pro move thing to do too.
Oh,
So
move all the way. Every time I try to explain this to people, they just get so messed up. But yeah, you might have to buy the call back, buy to close at a loss and re-roll it out. And if you don't like messing around like that with that precision stuff, just find a strike, even if it's a year out, 6 months out, whatever, higher than your cost. And you're going to have to be in it a little bit longer, but
I mean,
still
look,
not.
you could jump you can jump up all the way to 240 out 2 years and get paid like $2,000,
Yeah.
$1,500 a contract.
Yeah, so it's always fixable, folks. That's the other thing. You're just going to sell more time, or you're going to do precision trades below your cost and be willing to buy it back and roll it out. And I've done that. You know, we talk about the cash blueprint. We did it on Google. It'll be 4 years this August. When Google split at 116, we bought the stock and we were selling calls after the split. And it went from 116 all the way down to 88, and we were still selling calls below our cost basis, but we never got called out. And there was 2 times we did have to buy back a call. It wasn't the end of the world. Everybody still made a fortune on that thing. Yeah, but if you look back from the split, it went to $88 from 116. Yeah. So people were flipping out that we're not doing it the way we were doing it, and everybody did great.
Yeah, so if you got put in here, rode that pullback, but time tends to fix all these things, especially in a good quality company. See,
Exactly.
look at this.
Time does the heavy lifting, especially if it's a quality company. I love that line. Kraken, I hope you're paying attention. That's
If
that's
you
one for the books.
if you stopped out right here and you took a loss, you missed out on all this potential upside gain.
Book that loss and you quit, you were ruined. But nobody in the group did it. We had 400 or 500 people in there doing it live, bringing in just tons of money. And we were only doing it once a month. And now I've switched that to where it's more frequent, but thanks to you. But my point was just that you can still sell calls, even if it goes down considerably, you can still sell calls. You're still lowering your cost basis every single time you do that.
It's
No,
just
no other strategy that you can repair trades so easy. The goal is cash flow. And no matter what happens with the price of the stock, it's not stopping you from making cash flow just because it goes down, right?
now see, artificially placing timelines on yourself can be detrimental.
Mhm.
See, like if you're sitting here looking at this, a lot of people come at it all sideways and skewed, and they look at this and they got in here, and
And what the
all of a
hell?
sudden,
You don't know anything.
we're down here. You're like, I gotta sell this thing. I can't sit in this any
Got a
longer.
lot of heat. You don't know what you're doing, Carter.
Yeah, it's like, why are you worried about it right now? When you got in, you wanted to be in the stock, right?
That's what I said.
When you got in at a price you agreed to buy it at, right?
Yeah.
Yeah, these are core to the triple income system right here. These questions.
116, 116 after the split.
If you thought 116 was a great price,
I thought it was a good price.
then why is this a problem? You were
Well,
in where you wanted to be.
because people that are not familiar with this system, they cannot stand taking a $20 loss or whatever it was, more. 88 at 116 to 88. I can't do the math, but I was taking a lot of heat. I didn't know what I was doing and I picked the wrong stock.
Now,
But
when you're down $40 a share, 35, $40 a share in a stock, psychologically, when you look at that and you're like, sugar honey iced tea, that's red. That I lost that money. But you didn't actually lose it. You have the asset. You have the shares. This is where a lot of people mess this up.
and the reason is because there's a difference between unrealized loss and a realized loss. And with the game we're playing, you do not need to book an unrealized loss.
There's nothing in the market that says you have to sell these right here. You own them. You had the cash. Unless you borrowed cash to buy those, which is already a fatal flaw. You should only do this with cash and money that you can have tied up for a while.
If you did this on margin, you're going to have problems. You'd have to pony up more money and you'd have a bigger headache and you'd be wanting to call and yell at me even more back then.
But that, look how fast this fixed.
I know. And everybody stuck with it. That was the most beautiful thing. It was an absolute, unbelievably great lesson for how to do this. I didn't expect once we started the program that it was going to go down right after we started. But, now I say 4 years into it this August, it's been one of the biggest moneymaker for people. And we've just been doing covered calls. That's it.
And look at that monster gain, especially this rip off of
Yeah.
the April low to
Yeah.
the more recent high. And I know you were buying back some calls in here. You didn't want to get called out because this awesome cost basis you had.
Yeah. Yeah. I finally let it go. Thing with AVGO and a couple others. I let big pieces of it go. But this is goes back to what you said, quality company. Even quality companies have a few rough patches. But I like what they do. I don't read too much into the fundamentals. I know what's going on over there, and It's good stock.
This is one of the cash generatingest companies I know of right here.
Absolutely. Now, the only reason people bailed on this and uh, is because if you did get called out, which we now have a few times, they don't want to go back in and lay down 31 grand on 100 shares, you know.
It's tough to think about, you
I
know. That's
agree
like,
with them. I agree with them. So, you know, we were doing IBIT and NVDA. Those were the three. And so Google, you know, from 88 bucks to now 310, you know, if you get called out and you made a ton of money, you're just not going to want to do 31,000 in one trade, right? So the alternative is we move over to something more affordable.
but if you get started up here, it can
Yep.
be a psychological blow to ride a $20 downside.
Been all
30%.
been all over IBIT ever since the options became available. I don't remember when that is, but we've been doing this for a long time. Cash Gen Blueprint just covered calls, and so this is one where we are selling calls below our cost basis, and we have just watching them expire. We haven't had to do anything, so it's been
But,
on.
if you're trying to get started right now, this one pays much higher right here. Similar pattern to IBIT, but it pays much higher because look at that beta, almost 3.
I
This is
just
like,
cannot tell you how much I love this hood. I can't. It's one of my top earners. It's one of my core.
I'm on it now. Now that we did the pullback, I'm on it. Like this is
I'm on this hard. What do I got on this thing? I did a 20. Yeah, I'm on it hard. I sold the 67s. See, where is it now? I'm not going to get it. I sold the 67s. I sold the 69s. I sold the 70s. Where are we at here? Am I going to get it at 70? No. So I sold the 67s, the 69s, the 70s, and I'm already long a good piece of it. But I was wrong about the trend, and you were right. And despite that, it's still been a great moneymaker. Even
I'm
though I was
actually
wrong, I was right.
I'm actually been selling the 74s and
Cool.
the 69s.
Nice. Yeah, we're both on the same trade.
So these 74s have been absolutely printing money because it keeps churning right at that level.
Rolling them over. So under 10 grand, this is a great idea to consider.
And let me just pull this up really quickly in PXO. I'm gonna have to roll these forward probably tomorrow. But this is look at this 74 pays 111% right now.
Well, you don't need many of those to compound to hit your goal.
Yeah, exactly. Like, that's the craziness right there, right? You can roll these forward every week until it starts moving. Who says this is going to move? Like it may just churn in here for 6 months
I
and
agree.
keep paying.
10 of them would pay you $2,400, $2,300 today.
And you could do that every week.
Every week, 2,300 a week. How would that change your life? 2,300 a week on one trade. Boy, wouldn't you be lucky to get this one put to you too? Wow.
Upside potential. I like it. Like this is for people that may not have seen this before. Let me pop this up a little bit bigger here. Let me zoom this up. So this is
on there. You have to put a point on there and say, Jack was wrong here. Where was I wrong? 132?
I don't have this on the right thing here. Here we go. So look at this. You see this pullback right here? Right? It did that. Look at that right there. Did that pullback again? It has done that pullback again. So it's done this pullback 3 times. It did this expansion out of this pullback right there and did it right there. So if it's done the same pullback 3 times. It's done the same expansion twice. What do you expect to happen over here when it gets done?
Goes the weasel.
I expect it to do this same run it's done twice before, after the same consolidation it's done twice before. And that's the kind of price target, up around 300. Now, what's the time frame on that? I don't know. Maybe 27, maybe 2028. It doesn't have to go, like, the speed doesn't have to be the same. Although if it does the same speed when it gets going, it'll probably be up here maybe late this summer, maybe in the fall.
Now, if you paid any attention to the fundamentals, you'd know they were growing in their options. Almost 7% of all options, I guess, now are traded through Robinhood. About
Yeah,
1.5% all crypto. They're really, really, really gaining ground.
now look at that. It actually did that same pullback again right there. A little slower, but same size. Right there, off the bottom. And that same gain. So it's actually done it. It's already done it 3 times and done the pullback 4 times. So why wouldn't it do it again? It's a trend pullback continuation pattern. I love this. I love this pattern. Like this is why I'm all over it right now.
I put the triple crown on it. So just so refresh you on the triple crown, that is going long the stock and selling calls against some of the long. So let's say you buy 200 shares, you'd sell 1 call, not 2. You'd stay long 100. And at the same time, you'd sell puts. So you'd sell cash secured puts on the stock below it. You go long it and you sell some calls above it. That way, if you get the eventual rip, you're not capped where you are capped with you sell the call. You got that free 100 shares and the put's going to expire worthless and you'll get called out of some. And then it's game on.
And there's a resistance right in here. When we get up in that area, I just crashed out. Cool. My drawing tool just crashed the chart. Trading view sometimes crashes out.
Ooh, that's my other baby.
That's a horrible looking chart.
Love this thing.
that was apparently the last time I saved the chart. We were on that one. But so there is a resistance. Just to complete the loop here. There is a resistance right up in here. And if and when we start running, we may consolidate in here, give you another chance to churn some premium before we pop on up. And it doesn't have to do this, but more often than not, we do churn in this. It was a support zone on the way down. We hung out there for, on the way up, we hung out there. On the way down, we hung out there. This fib line wasn't here until we made this low. Crazy enough. So we're likely to consolidate in that area again because it's been there once, been there twice, maybe be there 3 times, and then game on to run higher.
All right. Who likes this hood idea?
I like it. I mean, I'm already on it. Already on it.
Yeah. All right. Patty likes it. Mark's already in on it. Sylvie loves it. Yeah, you guys are in on it. We're
Yeah,
looking out next Friday, probably. Expiration.
Hold on, Jack. Let me pull something over real quickly.
Susan's in it. Mike is in it, biggest position.
I know you love this right here.
Aisha loves it. I hope I'm pronouncing your name right, Aisha.
I started doing it February 20th, so we're almost a month in. Almost a month in. Using 7,400 bucks. Just got one. 74 strike. I've already generated $731 of premium.
Kay loves it. Steven's in it. And she says you're amazing, Jeffrey.
Even if I got put this right now, Jack, if I got put these shares at 7,400, my cost basis is already $7.30 below So it's already at 67.
Dude, you put yourself in a no lose situation.
Right there. And look, I got paid $3 on the last roll last
See,
week.
this is why though, this is why I say I like to go back to the well, because if you don't do it, go back to the well, you can't get that cost basis down real good, right? If you just hit it and quit it one time and then archive the trade and move on and find another trade, you don't really get a chance to set yourself up for a big profit. Like eventually here you'll get it and you'll get called out and you got such a low cost, it'd be a massive boost in your profit line. I
I mean,
like the same stock over and over and over, and this is why.
if I get it put at 74 and it goes up to 300, I mean, that's even bigger. Like that's where the real gain comes from.
Sure.
Is
That is-
going from that 7, like this is where it gets really crazy. Let's say we got it at 74. Put this at 74. Our risk right now is down to 67. If, because I've already done the premium, let's put it right there. So my risk is $7, Look at this gain potential if we go up to 300.
Now, if you got called out at 80, would you be pissed if you watched it go to 300?
Not me. If I make good money on it, I'll be okay. But I'm probably, if I get put this, I'm probably going to be very conservative on where I sell my upside calls. I'm not going to be very aggressive.
Right. In other words, you're going to place them at strikes that it's very unlikely to get called out at. So you can
Yeah.
still get cash flow and not have the wolves take one of the flock out of the herd and take it up into the hills.
Like the reason I talked about a potential to consolidate in here, that's a good place to target selling calls. Another good place, the roadmap line. That's another place we usually pause. Another place, prior high.
This thing has so much upside potential. That's why I got to put the triple crown on it because I don't want to see it go to 300 and I'm piddling around down here at 69.
Even if you're piddling at 100 and it goes to 300, you're still going to be.
Yeah. Jack does not like getting called out and watching, and when it's already higher, which happens to him. But that's it. And we got some pretty cool trades coming up in Tesla. I know we looked at that, but that's been such a laggard. And I'm pretty sure that Blake has a very cool trick to show everybody on how to take advantage of Tesla trade. Is that it?
You guys already know it. I do have a cool trick, and I always have a cool trick to show everybody, and it's a different trick.
Yes.
It's one that features one of my favorite gurus, and that's Lance. So I think you guys will really like it. And obviously Jack's in here too. But we have Lance's humor. And I think sometimes you just need that in your life. So
Yeah, I got to clarify something. Lance is not my nephew. I refer to him as my nephew in Florida because I love him like a nephew. He is like my nephew. I got to keep him in line a little bit, He just is exactly like a nephew. So he's a great guy and a great trader. But yeah, Uncle Jack and nephew Lance talking about how to trade. Oh, look at that hat my nephew has on.
yeah, I know. Look at him. You guys will love this. So I'm going to fire this thing off. Guys, stick around. And thanks for being here on Market Masters. And here we go.
And Jack, let me read this before we get started. Please note, profits, performance shown are not typical. We make no future earnings claims. You may lose money. The trades expressed are from historical backtested data in order to demonstrate the potential of the system. The average backtest return, winners and losers, 25.4% per trade, 6-day average hold time, 81.25% win rate, with the average winner of 54.2%. Every trade targets 2709 in income based on 5G. Starting stake, every example on that same investment unless otherwise stated. However, do not need that much to get started. The average cost per trade is less than $250 per contract. We cannot guarantee future results. There's always a high degree of risk involved in the financial markets and trading. See the terms on the homepage for more information. And let's be real, There will be winners, losers, break evens. There's no perfect black box miracle system that only prints out winning trades automatically. If you hear that, run for the hills. The whole purpose of Jack's research is to work with traders, is to help give folks an edge in the markets. Again, if you can't handle losing trade, don't trade with real money. Again, losses in trading have occurred and will